wanted to make this video on why technical levels, don't work at certain times. And I know it sounds like an obvious thing, right? We can look back on a chart and back test and basically say, oh, well, of course we know that, certain supply and demand zones don't work here and there, but more, delving into not only the strategy in terms of, setups that you take, but also as well, just understanding the randomness of things that are beyond your control, right? And that, affects your trade might affect the trade in the short term, but over the medium to long term, as long as you've got really good risk reward profile, you'll be fine. But you have to understand that there are going to be times when you got pretty much like an A1 setup and it might not work out, whereas you might have another A1 setup in another chart and it did work out, and you're scratching your head and saying, why did that one work out and why didn't this one work out, etc., etc. So I'm going to go through these things. And as you know, we are, fundamental protagonists, right? We're definitely, take that into account. And now you've got two charts. You've got the Euro British Pound, yeah, and you've got the Euro New Zealand. And they pretty much have, the same setup, right? Which is a CPR, right? Demand zone, right here. So Euro New Zealand, Euro New Zealand and the Euro Pound, right? Now, the Euro Pound didn't work out. Yeah, the Euro New Zealand did work out. Yeah, and so you're thinking to yourself, well, why was that? And again, it's because of factors really going on beyond, a price chart. Now, yesterday, we had an incident where we had some dovishness come in from certain ECB members, European Central Bank members, who were basically saying that they thought that in the March meeting, I think it's the March meeting anyway, or the one after the next, that the ECB were potentially likely to not hike rates as much as previously thought, which then caused the market to have to reevaluate the currency. Meaning, the market is always future thinking, always forward thinking. And so, it's a kind of buy the rumor, sell the fact scenario pretty much at all times. Everything is priced in, and if it's not priced in, then it will be priced in. And so what happened on the Euro Pound is that, what was that on Wednesday the 18th, there was this setup, really nice setup. And I took this trade and lost, right? No big deal. It happens all the time. It's like breathing, right? You breathe in, you breathe out, you lose trades, you win trades. But the trade I thought I would take simply because during the morning when on the 17th, when the news kind of came out, which drew the move to the downside in terms of the potential dovishness of the ECB on the 17th, this is what drove prices down towards a nice area of setup, and then looking for an entry, which I got. And at the time of the entry, we had one of the European Central Bank members come out and say, well, pretty much, no, it's fine, right? Everything is okay. The European Central Bank is probably likely to continue. Christine Lagarde is likely to continue with hawkishness. The market kind of rallied a bit, right? Everything was looking good, and then it kind of plunged again, right? And it went to down to more of a daily demand zone, because ultimately, what are demand zones? Demand zones are areas of potential value, not exact value, right? It was value here because prices went to the upside, and the question is always, will it be value here? Nobody knows. It's the reason why we manage our risk. If we knew for sure, certainty 100%, then I would risk 100% of my profits on this trade, right? But we don't, so we just manage our risk. Now, this was factors beyond the technical setup. Yeah. So beyond the technical setup, there are things going on which dictate what price is likely to do. Now, we weren't wrong in our assessment, or I wasn't wrong in my assessment of the euro pound, right? I still believe the euro is in a better position than the pound. And so what the market is doing is saying ultimately that this is a potential bargain, was a potential bargain, but we just don't agree at this point in time, right? We want to get a cheaper price, which it turns out that they actually did end up getting a cheaper price for those who wanted to buy into the euro. So, you know, I did say yesterday as well in the group that you would probably end up having to wait for Christine Lagarde to come out and really put a kind of confirm her hawkishness, which she pretty much did. And we can see that the ECB, this is today's report from ING, Euro ECB dovish speculation didn't last long. So the European Central Bank provided a very reasonable amount of pushback against reports earlier this week that suggested 25 basis point increase were being considered, right? So, you know, going back to, obviously yesterday, we did have Christine Lagarde push back on that, and you can start to see now, you know, the reaction of this, because now the market is probably now revaluing the fact that, yeah, everything's on track, right? I'm not saying that prices are going to go to the moon or anything like that. I'm just saying that, you know, this is definitely now a decent bargain zone, and if prices do come back, then possibly, you know, you want to, if you haven't got into this trade, you know, you may want to be a buyer, and as long as obviously the British pound continue to suffer, which it looks like reports are coming out that you know, the data might be better than expected, which is a really kind of strange one, or things aren't as bad as they seem, which that is again yet to remain to be seen. But either way, this was, this is what was happening, right? So we had a pretty, standard setup, good setup, not work out, and this is due to things going on behind the scenes. Now, again, nobody knows. Sometimes this can work out in your favor, and sometimes it won't, right? So we go to the Euro New Zealand, and, again, same setup, but in fact, this one ended up working, right? Again, the timing of things, so that was when the ECB were a bit dovish, or reports were a bit dovish. And then as we got to, Wednesday, even the day before, one of the ECB members came out before Christine Lagarde, that ended up being kind of like the limit. And then we ended up getting, in fact, I think the Prime Minister of New Zealand, resigned, right? So that ended up being something, again, that people just you can't predict or forecast, right? Or the average retail trader can't or wouldn't be able to, unless you're really following closely, their politics, and maybe there was again a potential for her to go, but ultimately we had news events, right, that coincided with both the move to the downside and also the move to the upside. And so when you're looking at, back testing, strategies and looking at, levels and things like that, one of the things you have to, well, most traders won't be aware, especially if you're back testing, because it's pretty much very difficult to go back to every single move, and it depending on the time frames that you're looking at, to go back and say, well, what happened here, what happened there, why here, why there, because especially even in the short term, prices are driven by more liquidity and so more of a liquidity, from a liquidity perspective, market makers, etc. But over the medium to long term, they're driven by fundamentals and risk sentiment. So when you're looking back on trades and trade setups, it's always I guess you have to understand this, is that not all levels are going to work. Nobody can predict the future. Price in the medium to short term is medium to long term is driven by more fundamentals. And as long as you get the direction right overall, if you can get the direction correct, and you think that prices are going to move 500, 600, 700 pips, 1,000 pips into the future, then one level one trade does not ruin your account, etc. All you're doing is ultimately, as we've seen on the euro pound, is you see a level, you take the trade, cool, you didn't get, that level didn't work out, you wait for a lower level to re-emerge. That is the level that you want to get involved in. Brilliant. Okay, excellent. There's an entry, and then you look for a trade there, rather than trying to chase price going lower and then trade, and then it reverses on you, then you're trying to buy at highs, and then you end up buying at lows, and then if that was the case, then technical analysis, so many people would be a lot more successful at technical analysis if that's all you needed. People wouldn't need fundamental analysis, and banks wouldn't use fundamental analysis, but we know that they do, because they write reports, daily, weekly, monthly reports on the fundamentals and valuations. So ultimately, your trading strategy and the trading strategies that we use, these are the filters that we have to use, and this is what we understand goes on. It's nothing to do with you. It's nothing to do with the trading strategy per se, as to why you might lose a trade or two or three, or even go through a losing streak, right? Because sentiment could be against you, whatever it is. I don't know what time frame you're trading, what entries you're using. No idea, even though you should be following my entries, and my strategies to the T. But ultimately, when you understand the dominant valuation and fundamentals and risk sentiment and what is really going on as to the reasons why, you won't be disappointed when you lose a trade or two. Just understand that, what it is, what it is. You lose a trade, you move on, you buy at a better level, right? It's not, some people might call it catching a falling knife. In my book, it's not catching a falling knife. It really is just understanding where bargains potentially are on a price chart, and if the market agrees with you at that time, then brilliant. If it doesn't agree with you because there are things going on but beyond the price chart, fundamentals, risk sentiment that you're maybe not aware of, or even if you are aware of, right? It still might go against you. Just look for the lower level if the fundamentals have not changed, the risk sentiment has not changed in your favor. So yeah, levels work, levels don't, but the key is to, when you make money and when you run a winning trade, is to try to make as much money as you can from your winning trades, and really mitigate the losing trades and reduce the risk when you're losing trades. I know it sounds very cliche, but that is pretty much what we're doing week in, week out, day in, day out, month in, month out. Anyways, guys, hope that helps, and take care, and speak to you soon.
But if I lay down and I play dead,